Good morning, candidates of business studies. This morning, I wish to take you through a financial statement that is also major in the national exam, the cash book, and I wish to focus more on the three-column cash book. You know that a cash books, there are various types of cash book. A single column cash book that majorly focuses on the cash count and the bank account. Then we go to two-column cash book that will now enclose the two accounts in one statement. Then we move to three-column cash book that I'll wish to talk about in details. Now, three-column cash book is a ledger because it's a book of almost three accounts: the discount account, cash account, and the bank account. It's also an account by itself. Three-column cash book, it must have the DR side and the CR side. It comes in T-shaped format where you have the date, details, folio, discount allowed, cash, bank on the DR side. On the CR side, we'll separate by two columns line. Then we'll have the date, details, folio, discount received, cash, bank. Now, I will wish to take you through a few transactions and see how you record them because they normally give challenges to students. For example, 2020 June 4th, cash sales amounting to 30,000. So the business made sales amounting to 30,000. It was a cash transaction and it was received in the form of cash. So this you write 2020 June 4th sales. You record on the cash column 30,000 on the cash column. In a transaction like June 6th, bought stock worth 70,000 and paid by check less 8% discount. So here the business is making payment. That transaction should be recorded on the CR side because when the business make purchases, the business receive commodities and make payments. So the 70,000 here is not actually the money that was received by the business, but it is the 100%. So you must get the 92%. So I've been told that the business received a discount of 8%. So get the 92% of the 70,000. Then the value of the 92% you record on the CR sides on the bank column. Then the difference between the value of the difference between the 92% and the 8% is actually uh, the discount value, that's 8%. You record the discount received column. So don't record 70,000. Get 92% of 70,000, then that is the value you record. Then 8% you record in the discount received column. Then on 9th June, received 25,000 from Lunyangapuo, a debtor, by check after allowing 2% cash discount. So there the business is receiving. So we record that transaction on the DR side, on the receipt side. The DR side is the receipt side. So we record that's the very money that was 25,000 in Lonyangapuo, or you write the date, June 9th, Lonyangapuo, 25,000 on the bank column because it was received by check. Then 25,000 is actually the 98%. So you get the 2% as the discount allowed column. When the business is receiving, the business allows a discount. When the business is making payment, the business receives a discount. So this one you record in the discount allowed column. Then we move to 10th June. Proprietor took 10,000 cash for his son's birthday party. So those are drawings. Any resource taken by the business owner for personal use, we call them drawings. So actually they reduce the business assets. So you take it to the CR side, you write there drawings, 10,000 actually on the cash column. Then withdrew 48,000 from the bank for office use. So this one is counter transaction. So you will just as it says withdrew 48,000. So you will record 48,000 on the CR side on the bank column. Then on the bank column, then you come on this on the DR side, you you record 48,000 on the cash column, and the details for the bank column you write cash, details for the cash column write bank, because it is a transaction that is affecting both the cash account and the bank account. Such a transaction we call the counter transactions. And then we move to an account. Murgol settled his account of 48,000 by check. By 15th, Murgol settled his account of 48,000 by check. So this kind of an account was cleared. So and a check was received by 45,000. So you write on the DR side, Murgol 45,000 on the bank column. Then another one on 20th, Murgor check was dishonored. So when a check is dishonored that was actually received, on the date that was received, it was recorded. Like for our case, on 15th, Murgor settled his account of 48,000. We received that amount, and we recorded on the DR side, on the bank column, we had 45,000. Then when you come to 20th of the same period, Murgor check is being dishonored. Just go to the CR side, record 20th, Murgor, and on the bank column, record the very amount 45,000 that was received, so that it will automatically cancel the transaction that was received. So that's actually how you treat the dishonored checks. Go to the CR side and record it as it is with the same value, then it will automatically cancels out. We move to another transaction. Sold goods worth 68,000, receiving 28,000 cash and the rest by check. So you come to sales, you on the cash column record 28,000. The difference is actually 40,000. You record on the bank column. So that is a simple one. Then you are being told transferred all cash to the bank except 8,000. So when you are being told to enter this kind of transaction, transferred all cash to the bank except 8,000, focus on the bank column, focus on the cash column and of the DR side and the CR side before you consider the bank column. Now on the receipt side, get the total of the money that was received in the cash column. On the CR side, also get the total of the money that was paid on the CR side. So because DR side symbolizes the money received and the CR side symbolizes the money paid. So get the difference. Once you get the difference, you will take the totals of the DR side minus the total of the CR side. Now you will get actually the money that is made by the business when cash payments were made. Then you further less 8,000. the value that you get after getting the difference between the DR and the CR of the cash column, and you further minus 8,000, that's actually the remaining value is what now you take to the bank, because you are told to bank all. So you come on that particular date, it is 30th, uh, you write bank, cash on the cash detail, you write cash, cash on the details, you write cash. Then on the bank you write the value that you get. Then you go to the CR side on the very date, again June 30th, you write this time, you write bank, then you write record the value on the cash column. So you shall have treated that transaction very well. Then there's a concept of balancing this particular cash book. Now when you're balancing the 3-column cash book, the discount columns, you just get the tallies, you tally them, and you don't balance the discount column. Remember, discount columns, they're just tallied, then you leave them the way they are. Then we balance one account at a time. So when you consider the cash account, we start with the cash account, and the on the CR side, and the cash account on the DR side. So you consider the cash account. So you get the totals of the cash account on the DR side and the total of the cash account on the CR side. The highest value is what you put in the total column, or in the total slot. Then the difference becomes your balancing figure, to either be carried down the CR side or brought down the DR side. Automatically, bank column will follow the same route. You get the tallies of the bank column, the DR side, and you tally also the CR side of the bank column. You see the differences, the highest value become the balancing figure you put in both sides of the total slots. Then the difference become your balancing figure. Now you carry down, and you also write it as brought down. Then you have your balance sheet, your column balance sheet balanced. Now remember, a balance sheet, a cash book, is actually a statement that won't record the cash transactions. Here we don't record credit transactions. So transaction to be paid later, or paid on credit, or received, or made credit sales, those one you don't record on the cash book. So cash book, we only record cash transactions. I can also highlight some other transactions, like sold goods worth 20,000 cash less 5% discount. So here you don't record 20,000, but you'll get the 95% of 20,000. That is what you record on the DR side of the cash account. Then the difference, actually the discount, the 5% discount, because a discount allowed. Purchase goods on credit 16,000 from a that one you don't record. Credit transaction not recorded on the cash book. Issued a check for salary 20,000, that is payment direct. Salaries on the CR side, on the bank column, 20,000. Don't write check, you write salary. Mitumishi Adeta settle his account of 75,000 by check less 10% discount. Mitumishi Adeta settle his account of 75,000 by check less 10%. So you know that the business is receiving some money here, and actually account of 75,000, it's not money. So don't record 75,000. When you're told settle this account of 70,000, 70,000 is not money. So you calculate, like, by check less 10% is 75,000 is actually the the 100%. So the money that was received by the business is 90%. Get 90% of the 75,000, record, then the difference, actually the 10%, is the discount allowed. So when you are told to settle this account of is not money, you record the money that was received, and the money that was received is the 90% of 75,000. Calculate it and record it. Mitumishi, on the details, 16th on the dates column. Then on the cash column, on the bank column, you record the 90% of 75,000 that you've calculated. The difference, the discount allowed, we record. I hope you've taken note of that. Received a check from Munene, 9,800 after deducting 2% discount. Received a check from Munene, 9,800 after deducting 2% discount. So here, the 9,800 shilling is the value of the check that was received. So record you record Munene 9,800 on the bank column. Then you get the 2%. Actually, 9,800 shillings is actually the 98%. So you calculate the 2%, or you calculate the 100%, then you get the difference. That difference is the discount allowed. So here in this, it is different from the one of the discount of the account. This one is now money. The other one was account. So you have to calculate the value that was received. Here record the money because you've been given the money. You record the money and you get now the discount. And that's the difference. Laboso, who is a creditor, had her account settled with 60,000 by check less 3% discount. So actually also here, the account is being settled. It means that 60% is less the value of the account. So 60,000, so the 60,000 is actually the 97%. So you get is the 97%, and it is actually the money that was paid. The boss who is a creditor, so the business is supposed to pay. So the business paid. So you go to the CR column, record Laboso 60,000. Put that 60,000 shillings. Then you calculate the 3%. Actually, 60,000 is the 97%. So calculate the 3%. Then you get the discount received. And so many. So Rooney Adeta paid in cash 30,000 in full settlement of his account of 15,000. So Rooney Adeta. So you write Rooney 13,500. Then you get the difference between 15,000 and 13,500. That's the discount allowed. Here, the 13,000 is the money that was received. 15,000 is the value of the account. So the 15,000 is not money. It's the value of that account. Withdrew all the money from the bank except 5,000 and transfer it to the cash till in the office. So the same treatment. You withdrew all the money from the bank. So of except 5,000 and transfer it to the cash till. So get the money that is in the bank column, the DR and the CR, get the difference of the payments and the money received on the bank column, then further less 5,000, the money that you get after lessing 5,000. Now you're supposed to bring it to the cash column. Come to the DR side, write bank, record the money in the cash column. Then the CR side, write cash, record the money in the bank column. You shall have treated that. Balancing it, you start by balancing the cash column and the bank column. When you balance the cash book, you might start by balancing the cash column. Get the totals of the DR side of the cash account, of the CR side of the cash account. Then the highest value is what you put on the total slots. Then the difference between the DR and the CR become your balancing figure. Then you have your column of cash account balance, become the balance brought down, the balance carried down, and balance brought down. Then you go to the bank column, get the totals of the DR and the CR, and the highest value is what you record. The difference become your balancing figure as carried down and as brought down. Then you have your cash book balance. And so your work is neat, be keen, and you do your entries correctly. Otherwise, thank you.